We are joined in Washington, D.C. by Uri Dadush, who's the Director of International Economic Programs at the Carnegie Endowment for International Peace. And Uri was formerly the World Bank's Director of International Trade. So Uri, first off, let me just ask you, if you echo what Stephen Jen of Blue Gold Capital is saying, is a Greek default unavoidable at this point?
Well, unless Greece gets the aid that it needs, I believe a default is unavoidable because the size of adjustment that is required of Greece is simply unrealistic, given the fact that it cannot devalue or use monetary policy to stimulate demand.
Okay, so what can save Greece at this point? Because it looks like these rescue packages coming from the EU, coming from the IMF, seem a bit fragmented.
Yes. Up until now, we don't have sufficient clarity to reassure the market that there is a backup, a sufficient backup. We have general statements of support. There is a general statement that the IMF will be involved. But the specifics are lacking. What is the size of the package? What are the conditions associated with the package? What is the specific role of the IMF? What kind of monetary and fiscal policies will other parts of Europe have to follow in support, not just of Greece, but the other countries that are vulnerable? All of this is not clear at the moment. And as anticipated, the spreads are rising again as Greece tries to find more money.
Okay, so it sounds like you think that there is a risk of spread at this point, because I spoke to a Harvard professor, Martin Feldstein, recently, who said Portugal is probably going to be the next domino to fall in the Eurozone. So there are big troubles for this part of the region.
Yes. And if you look at the spreads, Portugal and Ireland are up there. They're nowhere near Greece, but they're 100 to 120, 30 basis points above Germany, and then following some distance behind are Spain and Italy. Now, I don't think any of this is immediate, but if the Greek problem is not dealt with in a much more decisive way than we have seen to date, then it's going to be very, very difficult to predict how the markets will react, not just with respect to Greece, but of course with respect to these other vulnerable countries.
It's Paul Gordon here in Hong Kong. I'm just going to show the viewers here what we're talking about in terms of how bad things have got for Greece. We can take a chart here showing that spread between Greek 10-year bonds and German bonds. As Susan noted, we've surged up here to nearly 408 basis points, in fact, now higher since the introduction of the euro in 1999. And over here, this chart showing credit default swaps, measuring the likelihood of default, according to investors, of Greece down here, was down here. It's now overtaken both Hungary, Romania and Latvia, all three of whom required an IMF bailout at various points. Shows how bad things have got for Greece at the moment. Uri, Greece is considering going on a roadshow in the US and in Asia to sell its bonds. Do you think the demand's going to be there?
Difficult to say. It's always in these kinds of situations, in the end, the question not just of the quantity, but of the price. They're trying to tap now a dollar market, in part because those who lent money to Greece in euros in recent months have lost money. So this is trying to tap another market. Of course, borrowing in dollars for them represents an additional risk. Everybody has to recognize that this is not the euro anymore. If the euro declines further against the dollar, as is entirely possible if this problem spreads, then Greece's cost of servicing this debt will be even higher.
Do you expect the euro will tumble?
I think the euro, well, of course, the euro has already come down about 10% against the dollar since the beginning of the year. And I think there is a significant likelihood, as I said, I think a couple of weeks ago on the show, that there is a significant likelihood if the Greek crisis is not decisively dealt with, that the problem will spread, and then you will have a lower euro. You will certainly have extended episodes of attack on the euro, and so all depends really on how decisively this thing is dealt with. I just want to say one other thing, which is in order to facilitate the adjustment in these vulnerable countries in the periphery of Europe, it actually helps quite a bit to have a lower euro for the area as a whole. In a sense, this is what the doctor ordered. But of course, you want this to be a managed process rather than something that goes out of control.
Okay, Uri, thank you so much for your time today. Nice talking to you. Uri Dadush of the Carnegie Endowment for International Peace.